One of the questions that I often get is, should I switch to an S Corp so I don't have to pay this? And the answer is, well, it's not as straightforward as you would think. I see a lot of promotion of S Corps, and I personally like the S Corp entity model. However, when you are taking things like that into consideration and doing tax planning to see how you can pay less in taxes over time, you have to consider the cost that you need to pay to save money on your taxes.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, how are you all doing today? I hope you are doing great. I am trying to survive this summer heat. I am excited to be here with you though today because as of right now, I am surviving. As I tell friends and family, this point of the year, I can't be in the sun too much because brown sugar melts, but that has nothing to do with taxes. So let me stay on task today. Today, we are going over self-employment tax for episode 8. And I want to share with you a story about self-employment tax and divorce. Okay? A few years ago, I had a gentleman call me, and I had never met this individual before. However, he called because he heard that I could help him with his taxes. And when we initially got on, I thought this gentleman just needed to file his taxes. But as we began to talk, he had filed all of his taxes up to date, but he owed the IRS $142,000. And as we continue to talk about how he got in this situation, I realized that's not even what he wanted to talk about. His wife was ready to leave him because they just found out he would not get to go on their anniversary trip because the IRS would not let him renew his passport. So as we began talking more and realizing that was the actual problem here, he was telling me that he used to run his own business. And you all, I have to tell you, the more I talk to him, the more I realize this guy is fantastic in sales, okay? He could probably sell you sand at the beach. He was so good at what he was doing. However, he stopped sales because he said, I can't deal with these tax problems. I need somebody to take care of the taxes for me. So we keep on talking. He's like, I thought my income tax was this rate, and I'm explaining everything to him. And he ended up hiring me, and I did the transcript investigation. And I said, sir, this is really because of two things. We have estimated tax payments that were not made, and then we have the majority of this tax being self-employment tax. And his reaction was similar to a lot of business owners that I speak with. He said, what is that? So if you're wondering too, what is self-employment tax? In today's episode, I'm going to cover what self-employment tax is, who pays it, and the question I often get, should I switch to an S Corp so I don't have to pay self-employment tax? So to start off, what is self-employment tax? Self-employment tax is an entrepreneur's share of Social Security and Medicare. So if you've worked a W-2 job before, you've been introduced to my friend FICA. FICA is your contribution to Social Security and Medicare. But the difference is when you get your check stub and you see that you have roughly 7.65% withheld for Social Security and Medicare every payday, that is not optional. They take it and you're like, oh, I don't know if I like this whole working thing. But what you don't see is that your employer actually pays 7.65% for you as well on your behalf. Well, when you become an entrepreneur, you pay 15.3%. This is going to be the total amount that is going to go in on your behalf. 12.4% of this goes to Social Security. 2.9% is going to go to Medicare. For 2022, your first $147,000 that you make in profit, you're going to pay self-employment tax on. Now, when your employer pays it, they do get to write that off. So what the IRS allows you to do, you also get to write off half of the self-employment tax that you pay, and it's called the self-employment tax deduction. So you may be thinking, I haven't heard of this before. I don't know how accurate it is. Well, trust me, you can take it all the way to the bank of the IRS website and check it out. If you run your own business, you will pay self-employment tax if you are set up as a single member LLC or if you have a partnership. But there's another instance where you may pay self-employment tax as well. So when we're looking at who pays it, anybody that has net earnings of $400 in their business. So keep in mind that net earnings is going to be your initial gross profit minus any expenses. So as soon as you get to $400, that self-employment tax is going to start kicking in. That's why I've worked with business owners that in the very beginning, maybe they only made $12,000 in their business, which is under the standard deduction. So they're confused as to why they owe taxes. Well, they owe because they still have to pay the self-employment tax even if they didn't pay income taxes. Now, for church employees with income of $108.28 or more, they also have to pay self-employment tax. This includes pastors or ministers on staff and other clergy. The way that you figure your self-employment tax is on Schedule SE. And as I mentioned, you're going to fill out this schedule and it's going to go along with your individual tax return. This is for people that are sole proprietors, which if you've listened in other episodes, you already know that if you're a single member LLC, the IRS doesn't recognize that as an entity. You are recognized as a sole proprietorship. But you're also going to file for Schedule SE if you are a partner. Partners get something that's called guaranteed payments. So if you work a W-2 job, you know that if you work a certain amount of hours, you're going to get a certain amount of pay. Partners are in a similar situation, but the way the IRS categorizes it is called guaranteed payments. But let me stay on track. That'll be something we'll save for a different episode. So with this contribution to Social Security, Medicare, you're figuring it out on Schedule SE. One of the questions that I often get is, should I switch to an S Corp so I don't have to pay this? And the answer is, well, it's not as straightforward as you would think. I see a lot of promotion of S Corps, and I personally like the S Corp entity model. However, when you are taking things like that into consideration and doing tax planning to see how you can pay less in taxes over time, you have to consider the cost that you need to pay to save money on your taxes. So when looking at, should I switch to an S Corp? Number one, yes. If you switch to an S Corp, you will no longer be paying self-employment tax. But let's go back to the beginning of the episode when I told you what self-employment tax is. Self-employment tax is Social Security and Medicare. It's your contribution to that. Even when you work a W-2 job, you'll still contribute to Social Security and Medicare. So if you switch to an S Corp, you are required to be on payroll. With that being said, with you on payroll, you are still going to pay 7.65% of the wages that you earn while you're on payroll to Social Security and Medicare. And now your S Corp, your business, is going to pay the other 7.65%. So at the end of the day, you're still paying that 15.3. But if set up correctly, you do have an opportunity to save about 50 cents on each dollar. But there will be a lot of different variables, so it's not as straightforward. I highly recommend you being in touch with a tax professional that is well versed in tax planning to see if the S Corp model will fit for you. Now, you may be thinking, I'm going to contact you so you can do it. I am flattered. You all know I am America's favorite EA, and I'm on the mission to fill the tax literacy gap one taxpayer at a time. So my job is to give you this information so that you're equipped to go to your tax professional and have a very educated conversation. I personally do not do S Corp elections anymore. So make sure you got that jotted down. I can give you the information on it. I don't actually do them anymore. But looking at other considerations for the S Corp, if it makes sense for you to switch, you will be recategorizing self-employment tax to FICA. So you're still going to pay close to the same amount. You'll just pay it at different times. But the other thing you need to consider is an individual tax return is not going to be as complex as an S Corp return. Now, in a previous episode, I talked about the time that they say it takes to prepare a Schedule C. And I asked you, how much do you bill a client for each hour of work? If you take that amount and multiply it by 10 or 15 hours that it would take you to complete the Schedule C, how much money have you actually lost in sales by wanting to do the tax return yourself? All right. An S Corp is going to be Form 1120S, and it's way more complex than the Schedule C. You have to remember that with this conversion now, you have a higher cost of tax preparation. And nobody should convert to an S Corp without tax planning as well. Tax planning is going to be a completely different engagement than tax preparation. So now you have those added costs. You have to keep up with your bookkeeping. We need clean financials for an income statement and balance sheet. These are going to be costs associated with your S Corp. And now, since at least you have to be on payroll, you're going to also have payroll costs. I would not advise you taking care of payroll yourself, or else you may end up being my client, because then you're in payroll trouble and have a trust fund issue. But what I want you to keep in mind is, yes, you can switch to an S Corp. To only get rid of self-employment tax, probably not a good idea. Now, we're all good citizens, right? So contributing to Social Security and Medicare shouldn't be a big issue. Now, of course, there are different arguments on that, and Social Security, of course, being the biggest Ponzi scheme of our time. But let's think about it this way. With Social Security and Medicare, you are helping fund programs for people that may not be able to afford their basic necessities right now. Think about the elderly. Think about the people who benefit from things like Medicare. When you contribute into this, that is who you are helping. Now, for every $100 that you make, once you reach 400 for my people who are self-employed, you're looking at $15.30 going only to your self-employment tax. So keep that in mind if you're just starting out. $15.30 of every 100 over 400, so roughly, if you're around 500, that's just your self-employment tax. Then you have to figure out your income tax bracket. And you need to make sure that you have your income tax being set aside at the federal and the state and local levels, if that even applies to you. I know here in Kentucky, we have 5% for the state. In Louisville, we have 2.2% for the city. You don't want to end up like my client, wanting to go back to work because you weren't prepared for taxes. I have people ask me, how much should I set aside? Well, I just gave you, for every 100, you need $15.30 just for self-employment tax alone. You want to make sure you have this amount accurate for when you make your estimated tax payments. Because while yes, paying self-employment tax is your good deed for the year, you don't want to be put out of business for doing your good deed for the year. Now, I hope this has been beneficial. I know it's a lot to take in, especially when you're just starting out in business, or if you're already overwhelmed with your taxes right now and you're facing a debt that you can't pay. So if you are in that situation right now where you have a tax debt, maybe you're just like my client was. Maybe you have a spouse that's getting ready to leave because we have this situation that you really need to take care of. My contact information is going to be in the show notes, and I want you to reach out so that we can set up a time to discuss your tax situation and how we may be a good fit to work with each other. Wouldn't it be nice to have your passport again next year? Wouldn't it be amazing to stop getting into it with your significant other because you have this back tax issue? I think it would be great, and that's what I want for you. So until the next episode, can you try, my friend, to stay out of tax trouble? I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.